Any questions here, team? Any questions? What's going on? We got 6 people watching. Should be able to do at least 6 questions. So there's can you go over the thought process to why you stay in a trade or why you get out of a trade? So if I'm going to stay in a trade and I have like the heebie-jeebies that, hey, it's not behaving the right way, or it's not reacting how I would expect, or something looks a little bit off, right, relative to what I anticipated strength to look like, I wait for the candle to close, and I basically wait to see if that candle would give me a new confirmation or not, right? So what would confirmation be, right? If we're looking for a breakout trade, it would be a strong candle shape. It would be strong volume profile, right? So increasing outlier volume, and it would hold higher highs or hold lower lows. So if I get those 3 things at the candle close, then I'm happy to stay in the trade, right? I'm getting evidence that my idea is strong. If I get 1 out of those 3 things, then I'm getting evidence that my idea is incorrect. So if we're looking at today's setup, for example, right? We got out here approximately this time, and it was because very weak volume, right? Relative to the breakout that we were looking for. So we played the opening range breakout here on the 3-min time frame. And we just played this breakout here to the upside, right? So our breakout was a setup from inside the opening range, closed outside of the opening range. And then we rode this move higher to like 815-ish or something like that. Initial setup was a red to green breakout, right? So the initial move of the day was red, and then we broke out to the upside, and we tried to play this momentum higher at 9:48, right? We got evidence that price action was stalling, right? Very small candle, not necessarily very strong volume profile. So we had reasons to get out. We could have maybe played a move there to the downside later on, and this would have been an active or viable setup. This would have been an active or viable setup, but had already made my money, so wasn't worth taking on any further risk. So, Jen, to answer your question, right? If I'm struggling to know if I should hold on to a trade or I should get out of a trade, I wait for the candle to close and I see if it's giving me confirmation, right? So is it giving me strong candle, strong volume? And then the setup I took here to the upside was a breakout from inside the opening range and closed outside of the opening range, and we ran it for some 50 points or so. Does that make sense? So that's the pattern interrupt, right, Jen? So if you get P&L focused and you're worried about that, then what do, right? You wait for the candle to close. That then becomes your trigger over when to make a decision. We have to get to the point, right, where we have an impulse. And just because we have an impulse doesn't mean we need to behave right away. We can wait. And if we're trading on the 2-min or on the 3-min time frame, we only need to wait, 45 seconds, 60 seconds, a minute and a half. Like everyone can wait that long. That's not particularly challenging. It becomes challenging in our own minds more than anything else. So you just use that then as your frame of reference. Okay, this is my thesis. I think that this is going to happen. Let me wait till the candle closes and see if my idea is correct or not, right? That's all you're doing. So you're repeating the same pattern that you have with your setup triggers, and you're effectively doing the same thing over and over and over again, right? So we're not reinventing the wheel. We're relying on the same skills that we already have, and we're just applying them in a slightly different context. So it's, okay, yes, I feel the impulse. I don't want to give away this P&L, but if the trade is moving strong in your favor, you generally don't have much reason to get out of it. So we don't want to get into this trap where we trust that our wins will become losses and that our losses will become wins. So when we have that feeling, doesn't mean we have to act right away. We can delay that decision and rely on skills that we already have to allow us to make an objective decision on if our trade is working the way that we expect or not. Any thoughts on how to deal with a market that is jittery, i.e., the market is making a definite movement up or down, but it's oscillating up and down by 5 to 10 points on top of the general movement up or down? If the market is being jittery, I don't have to trade, right? So we talk about this all the time. My objective on every single trading day isn't to catch the biggest move of the day, it's to catch the easiest move of the day. And so if price action is behaving in a way that kind of gives you like little random squirts or random movements in either direction, that's kind of counter to the thesis of this is going to be the easiest move of the day. So in that case, it's better to not even bother, right? Why force something in a low probability event where, yeah, you're going to get shaken out before it's going to make its move? It's not worth the mental capital, and the probability of you actually getting paid on that is very, very low. So, just because the market is moving doesn't mean we have to trade. And sometimes knowing when not to trade is more valuable than knowing when to trade. So this would have been my confirmation candle here at 950, right? A failed breakout above high a day, increasing outlier volume, strong candle shape. Stop loss would have been the high of my entry candle. So approximately in this case, 818. And hopefully would have been able to catch this move. And then on the flip side, the next opportunity I would have had would have been here at 1010. So same type of candle, right? Same type of volume profile, except this would have been a breakout trade, not a reversal, and then would have looked to play this move for as long as I could. So setup 1 to the downside would have been the reversal. Setup 2 to the downside would have been the breakout through low of day. Any other questions here? What else we got? So, Mandy, you have the same question that Jen had, right? If you don't know what to do, you wait to see what the candle closes and you use the confirmation skills that we use for our setup to define your exit, right? And then when you decide that it's time to exit, you focus on closing as your P&L is increasing, not decreasing. So what you want to do, right, is judge the candle, right? So what would a confirmation look like on a setup? It would be a strong candle shape, strong volume profile. So if you're unsure of when to exit, right, and you're like, oh, this is giving me an exit signal, wait for that candle to close. Did that candle give you strong volume or did it give you weak volume? Did that candle give you a strong shape or a weak shape? If it gives you weak shape, weak volume, get out. If it gives you strong shape, weak volume, get out. If it gives you strong volume, strong shape, stay in. So make that decision to be binary. Don't make it based on a feeling, because then you'll just end up panic closing. To get the volume on your EMA, you just tick the box. Well, you have the cheat sheet on that. It's in my courses. It's called Advanced Risk Management. So all that information is available to you there. I haven't used the aggressive entry technique for about 10 months now. Not in the way that you're describing it, right? But the aggressive entry technique just means that your stop loss is at the low or high of your entry candle, right? In the same way that the fake out technique, our stop loss is at the high or low of our entry candle. The only difference with the aggressive is that you don't wait for the pullback, right? Or you don't wait for the fake out. Once the move starts going higher, you place your stop loss and you click enter. Yeah, I mean, I stopped doing it because I was getting faked out too often, which is why I started using the fake out entry technique in about August of last year. And it's not one of those things that's objective, right? Different markets will give you different opportunities for entry techniques. So, you know, maybe we'll get to a point where the market is, I don't know, kind of like the COVID era again, right? Where everything just goes up in a straight line and you don't get those pullbacks. But right now, that's not the case. The important thing to do here, though, right, is to be consistent with your entry technique and your stop loss. Because when something stops working and you do the same thing every single time, it's obvious what you need to fix. But if each trade has a different entry technique, each trade has a different stop loss location, each trade has a different setup trigger, whatever it might be, it takes a really long time for you to notice the patterns that you need to fix to become profitable, because you're doing a different thing each time. So your data is random. The reason I was able to change so easily to the fake out technique was because I did the same thing every single time. I looked back at my trades and saw, okay, I got stopped out. It moved another 5 points and then it ran. And now I could be confident that if I changed my stop loss technique or changed my entry technique, that all of a sudden I was going to start catching the moves that I was getting faked out on. And if you were waiting for the pullback and you missed it, that sucks, but you're going to miss a million trades in your career. In the same way that I'm going to miss a million trades. The thing that can often be challenging for people in that situation versus me is you guys are judging yourselves against me trading, right? So if I get into a trade and you miss it, you feel pretty bad. But if I miss the trade, everyone misses a trade, or a vast majority of people miss a trade, and no one feels bad about it because I didn't miss it. So I would be very careful with like that comparison, because you're just going to miss it. That just is a part of life. Like, you're going to miss trades. You're going to get faked out on trades. You're going to get stopped out, and you're going to have trades that run 1,000,000 points on you. It's just how the game goes. So if you miss it, not the end of the world. If it frustrates you, close your laptop or shut down your computer or go pet your dog or go do something else, right? That gets you out of that mindset. There's always going to be another trade. And then you can just focus on what you could have done differently the next day, right? If it's something like, I don't know, life gets in the way, right? I don't know, maybe you're dropping your kids off at school, or maybe you woke up late, whatever it might be. You don't need to beat yourself up over that. It happens. It's a part of the game. So don't worry too much about that. Now, if you miss every trade, right, then that either starts to become psychological or deliberate. And that then becomes something that we need to work on and focus on. But if it's the occasional one here and there, that's totally normal. And trades will move without giving us a pullback, right? Trades will fake us out 6 times when we're looking for fake out number 5, right? So we just can't make it or allow it to be personal and feel like, oh, I did something so wrong, right? It's not the case. Yeah, and that happens. So it's like, not the end of the world. Yeah, journaling is super important, Mandy. I agree. And the starting point, I think, for any trading journal is, what did I do well on this trade? What did I do wrong? What can I improve for tomorrow? If you answer those questions honestly for 100 days, you will be a totally unrecognizable trader versus who you are today. And you'll be racking up payouts, no problem. The goal, right, with your trading, Mandy, and it's probably why I sound like a broken record sometimes, is the consistency. So kind of in the same way where we talked about, if I do the same thing for my entries, it's obvious what's wrong. If I do the same thing in my learning process, then it's obvious for me to figure out what patterns are broken or what things repeat. And that becomes like a zone of comfort, right? So I think oftentimes it's really easy for us to like overwhelm ourselves with trying to change 1,000,000 variables at once. And that never works. So if we're consistent with things and we focus on things one by one, we actually know what moves the needle and we stop relying on random results. So like the number one rule of systematic trading is that you don't break your rules. And the more and more we embrace that process, generally the better things go. And that's like one of my favorite Jim Simons quotes, who's a guy, probably the most impressive hedge fund investor of all time. Ran a company called Renaissance Technology. They constantly outperformed the market by 3x year over year over year for like 40 years. And that was his biggest philosophy. So there's always a smart sounding reason to do something else. But in reality, the smartest thing is to stick to your rules and follow your process, even when it sucks. And that's the hard part of trading, right? We kind of experienced that 2 weeks ago, right? Where we were doing the same thing over and over and over again, and we weren't quite getting the results we wanted, right? We had a couple days there where it was like one day up, one day down, one day up, one day down. And it was super frustrating. And a lot of people wanted to change things and they wanted to change their technique and trade a different setup trigger or do whatever. And none of those things would now be working for us when we're catching 50 points a day, right? So you have to just kind of learn how to survive sometimes, and then the market will find ways to reward you. Yeah, and it's a journey that's unique to us all. So when people say it took 6 years to figure out the market or took them 6 months to figure out the market, they're rarely talking about their strategy. They're most often talking about themselves. What else do we got here, team? Any other questions? I apologize today on the slight delay with some of the tech issues that people have experienced. My poor little dog's got quite the bad limp. I'm going to try and take care of him a little bit here today. We're working through some stuff here now, so hopefully everything will be sorted by tomorrow morning. But just apologies for that delay here today. I like those rules, Mandy. I like them a lot. We were playing some fetch last night, and he kind of did the dog equivalent of like, I don't know, rolling your ankle or whatever, and he just can't put any weight on one of his paws. So I take him to the vet and get it all checked out and stuff. That sounds like a formatting issue, Inner World Collective. We'll take a look. But yeah, if you have any issues, please raise a tech support ticket. I can't solve things from inside this chat. Just can't track people's emails to usernames to whatever. It's too hard. Yeah, little Ricky, he's quite the little suck up. And he needs to be carried up and down all the stairs and needs all the belly rubs. So that's been my day here today. So don't attach anything psychological to that red line, right? It exists there because it automatically generates my profit targets for me, right? So in the same way where I want to do the same thing every single time, my profit targets are the same thing every single time relative to my indicator. So it just removes one extra variable that I don't have to worry about. And it allows me to basically have a repeatable process, right? So those red lines are always 2x the distance of whatever that blue box is. So if the blue box is 50 points, right, the red lines are 100 points away. And so it's just a simple way of me always having a simple profit target that I can work towards. And there's no need to complicate it besides that. Any other questions here, team? Any other questions? Yeah, I mean that's the whole point. I mean, Andrew, I appreciate you saying that. The goal here, right, is I think oftentimes it's better to get your questions answered as close to in the moment as you can. Because when things linger, you just end up getting confused. So if I can help you guys alleviate that, that's fantastic. And I think it's made the chat on a daily basis a lot more focused and productive. So I think it's been a win-win for everybody. Any other questions here, team? So if you've satisfied all the criteria, Nick, so you've had, a minimum of 3 trading days and you've hit the profit targets, you should have gotten an email to do the activation and to complete that process. I mentioned this on the stream here today, but we've had some bugs with the activation, and we're working through some fixes on basically making sure that that is resolved. And so we're going through that process here at the moment. If you believe that you should have, please email backoffice@daytraderfunding.com and we'll be able to take a look. Sounds good, Kath. Enjoy the rest of your evening. We'll see you tomorrow. Crazy market recently. Hey, Fable's out today, so never been smarter. And more expensive. Yeah. No, if you're going to request a payout, you do need to create a Rise account. That's for tax purposes, basically. So yeah, you do need to create a Rise account. When you do request a payout though, and you don't have one, you'll be guided through the process of making one at that time. And then from there, each time you request a payout, it'll be literally minutes from when you request it to when it gets paid. All right, team, I'm going to go final call for questions here. Final call for questions. All right, team. Well, if no further questions, I'm going to go pamper my dog here and make sure he's a happy little boy. And we'll be back at it again tomorrow morning for another hopefully productive trading day. And then we'll do another one of these calls here today, right after market close. So 1:30 Pacific, 4:30 Eastern. And we'll do another coaching session then. So if you have any questions, save them for then. And in the meantime, have yourselves a great evening, and I'll talk to you guys tomorrow.